With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple at the earliest stage, then channelchek truly is the orchard. The listed companies support channelchek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for channelchek so you're always up to date on what's going on at the small and microcap data place. Welcome to the virtual Roadshow series presented by channelchek. This Roadshow features Paul Goranson, CEO, and William Sheriff, Chairman of enCore Energy Corp, TSXV ticker symbol EU, OTCQX ticker symbol ENCUF. Following a formal presentation, Paul and William are joined by Michael Heim, Senior Research Analyst for Noble Capital Markets, a FINRA-licensed SEC-registered broker-dealer, for a Q&A session featuring questions that were submitted by the live audience. You can find Michael's research on enCore Energy on channelchek.com or by clicking on the link in the description. With that, I am pleased to present Paul Goranson and William Sheriff.
Thank you. Thank you for joining. I'm William Sheriff, the chairman, and joining me is Paul Goranson, our CEO. Give you a little bit of background on the company and kind of a big picture of where we're going and who we are, and then Paul will take you through the details. The disclaimer there, of course, we're going to have some forward-looking statements, but a little background on the company. We've only come to some prominence here in the last 12 months, but we've been around for a long time, over 10 years since before Fukushima. And we have been in hibernation, really, in asset preservation mode, cash preservation mode up until this last year, waiting for the time to re-enter the market. We think this obviously has been the time, and so far it looks pretty good on that. The company is unique in that its real strategy is to put together the best people and talent in the industry. And we've done that by combining the Paul Goranson, who came in as our CEO, who was the one that built and operated Mestenia during the last operation, or last fuel cycle rather, in the 2005 to 08 timeframe, and was actually one of the few suppliers selling into the spot market as it had its meteoric rise. So bringing that operational skill base in and joining others that had actually put together Energy Corp and taken it through that same time frame, from a startup company of less than 2 million market cap to 1.8 billion, with a number of assets that were in the production pipeline, some of which have moved their way through permitting and into production under other names since we were acquired back in 2008 by Uranium One. I stayed on with Uranium One as a director for a few years and then left to start this company. Things were kind of calming down in the industry, and they divested themselves of some assets. We reacquired them, and we're all ready to go. And then Fukushima came along. So told our shareholders to go into hibernation for about 10 years, 5 to 10 years, and that seemed to have been the right plan. We're fresh and ready to go. We took the plunge back in the summer with deciding it was time to move into the uranium industry again, and with some vim and vigor. And with that, we started our first of what we think will be several acquisitions with the Westwater transaction. Westwater was the uranium assets of Uranium Resources, formerly Uranium Resources, and that provided us with 2 operating plants and licenses, or licensed plants in Texas. They aren't operating. They both have operated. A little bit of maintenance will be required to bring them up to operational standards. Rosita is the one that is closest to that. Be well under $1 million in 12 months, and it should be in operational condition. This acquisition really is a jump start for us because the time involved to get a license is a number of years, and of course that's not without cost, both on the licensing front and keeping the company going as an ongoing concern. And then of course your building costs. So it really jump started us 4 or 5 years by being able to pick up these licensed properties. With that, we got a number of assets in Texas, as well as augmenting our already substantial assets in New Mexico, and I'll touch on those briefly again. But the whole focus of the company is to be ISR dominant. We're going to focus entirely on US-based in situ recovery of uranium. And the industry is crying out for consolidation, so we hope to be an active part of that. There's several, as I say, 11 licensed plants, a number of operators, all of which are carrying their own overhead and operating costs. So it just is a common theme that they need to be consolidated. With that, let me talk to you about our share capitalization. Currently, we have right at 200 million shares outstanding, a market cap of just shy of 240 million. And you can see the warrants and options there with a fully diluted share count of 225 million. We're equally split between retail, and most of the retail is high net worth individuals and institutions, with management owning about 10% of the company. Go ahead, please. Here again, I'm not going to read all of these to you, but I just want to take a few of them and really illustrate the rationale behind our company. You know, uranium is not uncommon. It's the 8th most common element in the world. There are resources well known throughout the world. What's really in short supply from our estimation is the technological ability to permit and manage the operation through production all the way through the fuel cycle and then ultimately marketing your product. And so we've really focused on retaining the best possible people in the business. And for our ISR focused operation, we're quite satisfied and proud of our team. As I mentioned, Paul joining us was a huge step forward. He's extremely well accomplished, has looked at just about every ISR plant, either built it, designed it, or operated it in the United States and many throughout the world, most notably president of Cameco Resources. He spent a lot of time with Rio Algam, actually, and as I mentioned, Mustania with the Alta Mesa project in South Texas. Couldn't be happier to have him, and actually started his career with some of these same assets that we picked up from Uranium Resources, so he can let you know about that. Dr. Stover was one of the founders of the in-situ process. He was our former CEO, and he's also our chief technical officer now, brings a great deal of expertise, obviously, to the process. Mark Paliza spent a number of years operating in situ for Uranium Resources, and he's been with us since inception. And Richard Cherry has a great deal of knowledge in terms of the marketing as well as operations, having worked at General Atomics in C-level positions for a number of years. Bill Harris, I'll just touch on, strengthens our audit committee greatly, as he was a C-level executive of Celanese Hoist Corporation, and was brought actually to the Energy Metals team when we went to the New York Stock Exchange to satisfy Sarbanes-Oxley requirements, and he stuck with the team all the way through. Next, please. In terms of the day-to-day leadership, obviously under Paul, Carrie Merkey is the CFO. John Seeley is a PhD geologist. We brought in an expert in South Texas geology and in situ resources, and really complement the team going forward. Here again, I'm not going to belabor every one of these individuals, but I think it's really something to compare when you look at other companies out there, is the breadth of our team and understanding the entire nuclear fuel cycle, not just uranium mining. You know, we can go on and talk a little bit about the assets. As I mentioned, in Texas, we've got 2 licensed ISR production facilities. They're both rated at 800,000 pounds a year. They've been giving some consideration to combination into one single plant just for efficiency, but that decision hasn't been made yet. In New Mexico, we've got the dominant position in New Mexico. New Mexico is not without its issues. There's some Aboriginal issues there just due to the legacy of 4 or 5 decades of early uranium production in the 40s, 50s, 60s, and 70s. Those will need to be addressed, but don't lose sight of the fact New Mexico is the biggest and most well-endowed uranium district in the United States. And we've got roughly just under 500 square miles of patented mineral rights. That means that we don't have to pay anything for them every year, no holding costs. We own them outright. And these are old railroad checkerboard that went through the heart of the district. And we've got pushing 90 million pounds of historic resources. These historic resources were drilled out by major oil companies. These weren't fly-by-night companies, and the conversion of these historic resources to 43101 standard is a fairly straightforward process given the thousands and thousands of drill holes and logs that were done in a quality professional manner by the predecessors. In addition, of course, we've got about 32 million pounds of 43101 that's partially licensed under the NRC at Crownpoint. So New Mexico is really our long-term strategy. We're looking at that 5 years out. and a very important part of the company. The short term will be Texas, and that's where a good portion of our activities will be focused in the immediate future. In terms of other places and what we're missing in our strategy, we do have a midterm focus that we would like to augment. We plan to do that through acquisition or discovery in Wyoming, Utah, and to a lesser extent, Arizona. But obviously, Wyoming is a key place for us to look to be in the ISL business. So we have kicked a lot of tires. We are in negotiations with several parties, and hopefully we will be able to continue our history of mergers and acquisitions, both public and private, to build this into the premier ISL or ISR company going forward. With that, I'll turn it over to Paul, who can discuss the individual assets a bit further and leave you there. Thank you,
All
Paul.
right. Well, thanks, Bill. I'll just get kicked off right now because, as Bill described, our more immediate strategy is to focus on Texas. And you can see the picture of Texas here. We've got with the Westwater acquisition, we picked up 2 licensed facilities. That would be the Kingsville Dome and Rosita processing facilities. Also with those, we also picked up an exploration property, which has historic resources called Butler Ranch, and a past producing facility called Vasquez. But the advantage of working in Texas is that it's a historic mining district, but it's not the one that's most famous. A lot of people don't realize that Texas produced over 80 million pounds of uranium, and almost half of that was done with in-situ recovery. The Texas regulatory environment is progressive. It's very business friendly, but it's also well established and well understood. And because it's an agreement state for licensing, all the licensing permitting work are done in one place called in Austin, Texas, where the state capital is located. Unlike some states where you have split jurisdiction between Washington, D.C. and then the local jurisdiction. I've spent most of my career in Texas. I started with Uranium Resources back in 1987 at the Kingsville Dome project when we first kicked it off with construction, commissioning, operations, and some reclamation, and as well as Rosita in 1991. So I'm very familiar with these properties, and also I'm very familiar with the district that we're operating in. And there's a lot of opportunities going forward. We believe that there's significant identified deposits we can go after to enhance our production profile and extend the life of our current processing facilities. And it's backed up by the USGS, who just did back in 2015, did a report on Texas itself, the Gulf Coast region, and the fact that they expect there's another 220 million pounds of uranium that hasn't been discovered yet, in addition to what we know about now. So it's a pretty exciting area to be, and it's one that's well known, and we have a good bench strength to be able to develop it. Talk a little bit about the assets we got. So with the Westwater acquisitions, we picked up the Kingsville Dome and Rosita Central Processing plants. Both these sites are licensed by the state of Texas. And they have shown success in historic production. Both have been relatively recently upgraded. Kingsville Dome was upgraded in 2006, and then Rosita was upgraded in 2008. Both have the ability to produce dried yellowcake. We talk about a combined capacity of about 1.6 million pounds per year. And that's not the limitation of the plant facilities themselves or the operations. It's really the dryer capacity. The dryers that are installed now have a capacity of, at both sites, have a capacity of about 800,000 pounds per year. But that can be upgraded. The prior operator, URI, had the foresight to build in extra infrastructure to be able to add drying capacity as it was needed. So in effectively a bolt-on or modular way. So that gives us some additional upside on the capacity. And that's the limiting factor we have. Both these facilities, when they were refurbished back in 06 and 08, were refurbished to operate as central processing plants, much like what you hear about in up in Wyoming, where you have remote well fields with a remote ion exchange facilities that produce uranium and store it on resin, and then the resin's truck hauled to a central processing plant where it's the uranium is recovered and then concentrated and ultimately dried and packaged for shipment to a conversion facility. That reduces significantly capital cost. And this is a strategy that was done simply because these facilities operated as central plants but had ore bodies nearby that over a period of time had effectively depleted with limited future resources going forward. And so this gives us a lot of opportunities going forward. We don't have to spend a lot of money upgrading these facilities. We're currently focusing our efforts to return Rosita to commercial production capability. We believe it'll take less than a year and less than $1 million to do that. And when we talk about being at production capability, it's the one thing that you need is a critical path. One can go put in a well field and install remote ion exchange facilities, but you need to have the plant in good condition to be able to start receiving it. And Rosita is low-hanging fruit right now, simply because it never actually operated once. It was reconfigured, and so all the mechanical and operational wear and tear hasn't happened on this facility like it had at Kingsville. So Kingsville is not too far behind Rosita from being production capable, but it's going to take a little bit more work. But we're still keeping both our options open for those facilities. I would say, as Bill mentioned, talent is a key part of everything as well. Having people who know how to operate and how to develop and build is important. And we inherited an experienced and trained workforce at these two facilities. And so it's a pretty exciting time for them to hear us talk about moving forward with getting production capable. And we're going to be waiting on, we won't go into production until the market tells us that we need to go into production. And when I talk about that, that's, I talk about nuclear utilities actually contracting long-term contracts, seeing spot market price movements to drive that demand that we can respond to. We believe, our belief is that the market will be conducive for restart at or the commencement of commercial operations in that 2020 through, in a year to 18 months from now period. And that's based on what we've been hearing directly from utilities. I've talked to 13, 14 utilities since January about their demand, their needs, when they expect to have demand, and it's all consistent with that 2023 period. And it's also consistent with what the Energy Information Administration puts out annually in their May report, which talks about uncovered demand going forward. All these align properly with our execution plan for these two facilities. Also, when I talk about these facilities, there's tremendous upside in South Texas. In addition to the limited resources we have at Rosita and the land package we received with this transaction, there's potential upside for significant upside for Butler Ranch. We have some known historic mineral resources. Those need to be drilled and brought into NI 43-101 standards. We expect to do that activity sometime starting this summer. As part of our, over the last couple of months, we've been able to secure additional data, a database on properties near to Rosita that had a project with known resources with current 43-101 resources on them that could be brought into production relatively quickly because they had already been started through the licensing process in the past. And then we also have the opportunity with other properties nearby. We're using our database to go and identify targets for acquisitions of property acquisitions to put into the production timeline for Rosita and potentially for Kingsville. Bill talked about New Mexico. New Mexico has been a historic producer. I believe that, well, it says here over 350 million pounds of uranium was produced. It's a very rich and significant uranium district. Our properties are located west of Albuquerque. You can see them, they're in blue and green. The green properties are the ones that we held before the Westwater acquisition. The properties that are coming that are shown in different colors are the ones that we acquired through Westwater. We added significant properties, both mineral resources that give us an opportunity to have a long future in New Mexico. The Crownpoint property, we hold the mineral resources. That's a licensed facility owned by another operator. That's in-situ recovery. There's several properties in here that are in-situ recovery targets as well. We think that this is, like Bill said, this is our future, but it's going to take time. And the reason why it's going to take time is that there is a legacy of historic mining in the district. And that dates back to the Manhattan Project and after that, had some impacts on local tribal communities. We believe that those are some areas that we need to, as far as our enCore strategy goes, is that we need to focus our efforts on, in addition to the commercial side, the business side of it, we also need to looking at the community issue, local communities as a means to move forward and receive that social license to operate. So we've got a plan put together for that, and it's going to be obviously a work in progress. It's but we believe that we need to engage the local communities, and they're principally Navajo communities, and address some of those legacy, at least work with the governments and others to address some of those legacy issues, but also provide an opportunity for them to those communities to participate in what we're doing out here going forward, which they haven't had in the past. We believe there's plenty of examples of that, both up in Saskatchewan where Cameco's operated, but in other areas with the First Nations in Canada. But also there's some public-private partnerships that are actually active with the Navajo Nation. We believe those give an opportunity for us to work with the tribe. And then bring in New Mexico as being our long-term future. This is our uranium deposit, the resource overview. As you can see, we've got 43101s focused on New Mexico and Crownpoint and Hosta Butte projects. We do have significant projects with historic mineral resources. One that's missing off here is a project called Cebolleta, which we acquired from Westwater. That has significant historic resources as well. Right now, what we're doing is Juan Tafoya and Marquez project. We are currently in the process of updating a combined 43101 for these properties to further solidify the in-place resources and also provide the economic analysis. And we continue to evaluate the other properties that we have for future resource development. Focusing on New Mexico, at least on the Crownpoint Hosta Butte property, these are large ISR amenable projects. They are located in areas where it's already currently licensed under a third party, that's Laramide Resources, and they're currently, actually they're sitting idle right now waiting for market, but we believe there's a tremendous opportunity there. And you can see the resource that we have there are fairly significant. And Juan Tafoya Marquez, as I mentioned, is currently being updated on its 4301 resources. We are doing a PEA with that to provide the economics for it. The beauty of this site is that we controlled Marquez before the acquisition, and we acquired Juan Tafoya, and they sound like two entirely different deposits, but actually they're just it's just a different in ownership. You can see the picture there with the shaft, the head frame and the shaft. That head frame still exists, as well as the shaft is partially sunk to the top of the ore body. But these are two properties literally separated by a fence line, but the ore body is contiguous underneath. So it's a significant, we see it being a significant property going forward. It is conventional, principally. There may be some ISR capability there, but we're looking at initially as a conventional project as a in order to take advantage of the information we have today. Other properties we have is Nose Rock, and then I'll just go through these relatively quickly. There's West Largo, Ambrosia Lake Tree Line, and then I'll get to what I call our secret sauce, which is our data. You know, we have one of the things that we don't need to do is go do a lot of greenfield exploration. Because of this information, because we know where the properties are, we have a lot of work that was already done by other operators, and we believe that that work leads to good, productive future resources, and we're exploiting those as of right now, those databases, to be able to, particularly in Texas at the moment, to strengthen our production profile. This is basically a recap. As I mentioned, our goal, as Bill mentioned, our goal is to be the premier ISR uranium production company in the U.S. We believe that our technical team provides us. We have people who have actually operated and built and executed on production plans in the uranium industry, particularly on ISR. We think that our bench strength with respect to that is strong. We believe that our land position we have in New Mexico, as well as the opportunities we see in Texas with our current licensed facilities, strengthen our capabilities and reinforce our growth plan. And with that, I'll turn it over to Mike for questions, if there's any.
Thank you, Bill. Thank you, Paul, for giving a quick rundown on the story. My name is Mike Heim. I'm the senior analyst for Noble Capital Markets, following enCore here. I'm going to ask a handful of questions on my own. I would encourage other people to submit questions as well, and I will forward them to management. I'm going to start out with you, Paul, and a question I've asked you before. Obviously, uranium prices are very key to your company and really anyone in the uranium industry. You talked about a 12 to 18 month inflection point based on some of the conversations you've had with some of the electric utilities. Can you elaborate on that a little bit more? Is it just a question of they haven't locked in the supply, or is there more talk about some of the spot out of Kazakhstan starting to dry up? What leads you to make that comment?
Well, it's actually multiple points. So, of course, you know, the recent news is that Cameco Cigar Lake is restarting, so that brings another point of supply in. But in truth, what we've seen is that around the world there's been a degradation in primary production, and some of it that shutdown is permanent. With example in Niger as well as in Australia. The real issue is that there's been known production with significant resources that are standing on idly on standby waiting for market conditions, and those market conditions aren't a $1 per pound price increase that one might see in the spot market. They're significant, and a good benchmark to use is that Trade Tech issues on a monthly basis releases what they call a production price incentive index, and that sits around $43 per pound. And what the thesis is that the prices need to exceed $43 per pound to incentivize restarts and new production. And that's pretty consistent with what we've heard around the industry. And one of the things that's not happened is that we haven't seen a significant amount of uranium demand coming into the market from the utilities. There's been a lot of reasons for that. One is the uncertainty surrounding the 232 trade action that was brought about a couple of years ago. The uncertainties around the Russian suspension agreement negotiations, as well as a few other things that, COVID was another issue that basically took uranium procurement off and put it on the sideline. All those are becoming, there's more certainty being built around those now. The 232 and the Russian suspension agreement have pretty much been settled. The COVID side of the nuclear utilities have demonstrated they can go through refueling outages safely without interruption as a result of COVID and protecting their employees. So now there's a lot more confidence going forward. But all those things has led to a lack of contracting, which is what we need to see occurring to be able to incentivize new production. And everything I've heard is that from the utilities directly is that they'll be coming back into the market. They hopefully as early as mid 2021. looking to secure contracts for supply starting in 2023, and that's where we see that's where we also built our strategy around that, and so although spot prices aren't indicating any significant movement today, the spot is not a driver for right now for new production. It's term demand that allows you to producers like us to be able to have the confidence to be able to start and commit capital for new construction.
It does seem like we have a pretty big gap with companies like yours saying we need prices in the mid 40s and the spot being, around 30 or so. When things start to move, do you think that gap will close quickly?
It's hard to say. What we saw in the past is that it did. It started closing fairly quickly. A lot of this depends on timing, but my expectation is that once there seems to be a real demand in the market, not just producers buying uranium and putting them in inventory, but long-term sustained demand, you're going to see the price is going to be able to move relatively quickly, because if it's going to draw in new production or allow producers to secure contracts, it's going to have to move. And it can't be a 2 or 3 year long steady increase from $30 to wherever it needs to be. It needs to be relatively quickly, because there is a holding cost to holding projects like we have and others have.
And then, Bill, you've clearly put an emphasis on the in-situ recovery versus convention. Talk about why you think that has advantages over conventional mining.
Well, the advantages are many. The chief ones are your time to production is much shorter, your time to permitting is much shorter, your capex is much less, your ability to reclaim it and walk away from it when you're done is infinitely better than any conventional project. Those are right off the top of my head. But with all of those lower cost and faster timelines come a lower cost of production per pound in general, and so. It's a pretty compelling argument, and then you add on to it that we just happen to have a very elite staff with a great deal of ISR experience going back to the initial ISR invention. So it's a natural for us. If it weren't a natural for us, it's still a very compelling argument just on a financial basis.
If things really take off, what do you see as being the major bottleneck? Is it the reserves? Is it the processing?
I don't think we're really into a bottleneck position. I think the only bottleneck we might have, and welcome Paul to comment on this too, would be growth. I think our basic game plan in terms of getting our assets we have into production is not really subject to a bottleneck. I think it's laid out, and of course there'll be some ebb and flow in terms of the timeline with any project, especially now that so many of the supply chains in the world are disrupted due to COVID and sideways barges in the canal and all sorts of other issues. But you do have some of those things that'll give you a month or two difference here or there, or some costing difference. As inflation is certainly with us, whether people want to call it that or not. Prices are going up. Anyone that's building anything or eating any food or driving a car is well aware of the fact that prices are going up. So that'll influence it as well. But don't really see any bottlenecks. The only bottleneck I see, or hurdles that I see, are in the M&A line, and that would be in terms of growing the production beyond what capabilities we have now.
And so let's talk about M&A, and there's a couple questions kind of talking about consolidation. You've been very open about saying that you see that as part of your future. You've also talked about starting up plants, expanding plants. How do you make the judgment between which is more important, making acquisitions or putting money into your own plants?
Well, I think you've got to do both. First off, there's no certainty on an M&A transaction. It takes two, so to speak. And going a hostile route is not a very good way for shareholders as a general rule of thumb. So you've got to find positions where you have willing partners that have to see your dream and viewpoint of the world and of the market and of the business plan that meshes alongside. And you also have to be able to set egos aside. When I talk about M&A, it's certainly not exclusive that we would be the acquirer. I think our entire team is looking for building the best in situ uranium company in the industry. And we certainly intend to be active on the acquisition front. But if at some point that comes around to where we're the target, then if it makes sense, then that's something that we would do as well. But at the same time, you can't sit around and just do that. You've got to implement your own plan with your own assets and your own strategy, as if you're never going to get another project, because that's what you've got, and that's what you need to move forward on. And we're quite happy with our assets. But you've got to have a two-prong approach there. You've got to deal with what you've got at hand and move that towards production, because otherwise you're just acquiring things, and that's not really the answer. We need production. And our team is well suited to production. The assets are well suited to production. So that's got to be a focus of the company. At the same time, we obviously look at other opportunities.
We haven't spent a lot of time talking about the macro with uranium. We focused more on your company. I do want to ask if you've heard any update on a national uranium reserve. Maybe Paul, if you want to address that. Sure.
Well, the National Uranium Reserve is something that was set out in the 2020 Omnibus Appropriations Bill. It was set, basically DOE was appropriated $75 million to begin acquiring uranium for the Uranium Reserve. But as we know with governments, nothing is ever immediate. One thinks it is, but if you believe the news, but when it comes to procurement, government doesn't work quite in the speediness that we've seen for other actions. And this is the same case here. The DOE is currently going through they're putting together a request for information from stakeholders such as uranium companies to seek out how they best should go about doing this acquisition. They are also have to follow, because it's a federal action, they have to follow the national NEPA, the National Environment Protection Act, and do a environmental assessment on the impacts of this uranium reserve program. Now, we believe the scope of that will be fairly limited, but I think what the word coming out of DOE is they expect to get all this done by the first quarter of fiscal year 2022 and be procuring and that would be fourth quarter 2021 for those of us outside of government. It's moving along, and there seems to be support, bilateral support in the U.S. Congress for further appropriation to continue the program, and we're hoping to be able to see it funded to its full amount, full budgeted amount, which is $150 million. This we see as critical for existing infrastructure and maintaining the current sources of supply in the U.S. And it's a national security issue as well.
Has the government specifically said that it would be purchases from U.S. producers or North American producers?
They haven't specifically said, but in their charter that would be the Nuclear Fuel Working Group. It was intended to be uranium that was purchased directly from U.S. mining companies, uranium mining companies. And the expectation, the way it was described, that it would be coming from produced uranium, because the intent is to preserve the infrastructure and maintain the workforce. And you just can't do that with obviously inventory. A lot of it has to be U.S. origin material.
And at this point, no talk of price or quantity, just kind of this $150 million to be spent.
Right. Well, just keep in mind, as the first tranche is at $75 million. And there's talk, there's no real clarity on it, but let's not forget that the Department of Energy and its predecessor agency, the Atomic Energy Commission, purchased uranium, and I don't remember how many hundreds of millions of pounds of uranium they purchased from 1964 all the way to 1982. And they had a pretty sophisticated means for doing that. So I suspect that when it comes down to it, they will not be reinventing the wheel. They had a good process. It was a competitive process. They basically said they need this much uranium. They're going to pay this price for X price for it. And the competition was who could deliver and fulfill those requests. So now, is that what they're going to do in the future? I'm not 100% sure, but it just seems like they've already, there's no need to reinvent the wheel. So that's the messaging that I know DOE has heard from the U.S. uranium miners. So hopefully that's something they'll consider.
And then, Bill, this the first presentation is the first time I've heard you speak very much about reserves in Arizona, Wyoming, Utah, I believe. Are these existing properties you have, or you're just talking generally about potential areas you might get into in terms of making acquisitions?
Yeah, I think I was when I was talking about exploration. Certainly, it's not a high priority for us, Utah and Arizona. We've got a project in Arizona that is in the pipeline, but it's a long ways down the road. We do have some high-grade breccia pipes there, but we don't really have them focused into our plan in terms of timing. Utah is obviously an interesting state, but here again, more so from the conventional side than the in situ. Our focus is clearly on Texas, and in the short run, New Mexico in the long run, and Wyoming would be sort of our mid-range target. We do have some projects there that we'll be looking at, and obviously Wyoming is a target state in terms of new opportunities for us.
Well, speaking of Texas, you've mentioned several times, you think you can get the Rosarita plant up in a year and $1 million. What about some of the other requirements to actually get to the producing? I know you've been talking about doing some drilling. What else needs to be done to get that fully up and running?
Well, we have to. Well, we are in the process of preparing, well fields, getting well fields identified and mapped out. Those will have to have some limited permitting on them. Those are well-defined permitting processes. Historically, they've taken less than a year to get done to those permits. We're looking at those are some of the properties we put in our pipeline, and then it's actually executing on the well field development. So first thing we would do is install monitor wells, do the testing that we're required to do, and then once we see the commitment for the market, we'll begin installing well fields. And we have a pretty good idea what it's going to cost, about $5 million or so. The other thing we actually have is that we got with the URI, the Westwater acquisitions, is that we got 4 satellite or remote ion exchange plants, which are portable and can be easily relocated from location to location. And that gives us, I believe, a leg up on cost and short term and timing as well for basically infrastructure to produce. So the timing is driven, it'll be driven by ultimately by the market, but we have an experienced staff. We believe that the ability to get these well field permits in place are well defined, and we can do that in a relatively known schedule and be able to execute our plan.
So if I talk to an exploration company, they talk about a 5 to 10 year window to get from first drilling to processing. You're obviously much farther along with that, having the reserves, having the database, you said. If we had the go signal today, what type of time frame are we talking for getting uranium out of the plant?
We've been talking about that 18-month window. We're staying fairly consistent with that. Notwithstanding any unknowns, it's always when you're doing any plans or executing on any strategy, there are known unknowns and unknown knowns, et cetera. But there's always things that can happen that could impact your timing. But that's what we're looking at right now.
I want to thank you, Paul and Bill, for teaching us a little bit more about your company. If anyone would like to get some of my independent research I've written on enCore, please go to channelchek.com. Again, thank you for Paul and Bill for participating in this roadshow, and I'd like to thank all the investment community who's watched today.
Thank you for joining us for this virtual roadshow presentation brought to you by channelchek. View our YouTube channel for more video content, including C-suite interviews, virtual roadshows, and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and 6,000 other small and microcap companies.